about value share. Is that something UPS can do by themselves if the rest of the industry is going to try to take share and kind of aggressively grow capacity and pursue that growth?
So this is all about our better but not bigger framework, which is a start of pivoting the business to position us for success in the future. Sweating the existing investments that we've made is a really good thing in next year. Then we'll look at where we want to grow and how we want to grow. But for next year, we're going to sweat the investments that we've made. Brian, you might want to talk about that.
Yeah, Ravi, it's a good question. If we look backwards first, we put over $15 billion into capacity in the U.S. over the last several years, and that was needed. But now 85% or so of our ground volume is going through some sort of automated capacity and hub. So as we're looking at that and those investments, I've watched the ROIC actually trend down. A real focus going forward is going to say, how do we lower CapEx, ensure it's driving shorter-term paybacks to get better benefit, and I talked about where we're going to shift to in terms of healthcare, some specific to international markets, thinking about digital. So it's a different type of spend going forward, but I don't want to front-run the investor conference next year. We'll unpack that in more detail.
And I would comment just on the technology front, because that's such an important area of investment for us, well, for everybody actually. The customer wants a digital experience, and so we can't move off of that digital experience. In fact, we need to lean into that. But that isn't necessarily a capital expenditure, because software as a service, as you know, is paid through a license fee. So we're moving away from internally developed IT solutions to software as a service. So you'll see line item differences happening. The other thing I would ask you to remember is, as we grow outside of the United States, our international business tends to have an asset-light profile in most areas of the rest of the world. And that asset-light profile will certainly help spur growth and generate higher returns.
Great, thank you.
Jordan Oliger, Goldman Sachs, please go ahead.
Yeah, hi, morning, everyone. I just wanted to come back to the fourth quarter for a second. Obviously, you mentioned some puts and takes on the expense side, balanced against sort of the revenue quality, and then sort of highlighted the normal sequential domestic decline of a couple hundred basis points. I mean, should we be thinking then, in terms of the fourth quarter domestic margin at a base level, sort of holding on to that first half margin of around 6.6, 6.7%? I mean, is that, when you put all the puts and takes together, is that the baseline we should be thinking about?
Yeah, Jordan, it's Brian. Thanks for the question. That's a fair baseline. We had some pressures in the third quarter, which we discussed. But as you go forward, thinking about the 8.6 that we posted in the third quarter, the first half of the year was 6.6. So as you look to the back half of the year, assuming a baseline of 6.6 is a fair assumption, and we're going to do everything we can to beat that. We're seeing improvement on the pricing and the revenue quality side. The challenge are the headwinds I outlined for the fourth quarter. So balancing those two is going to dictate where we land.
Okay, thanks very much.
Thanks, Jordan.
Jack Atkins of Stephens, please go ahead.
Good morning, and thank you for taking my question. Just curious if you could comment for a moment, given the surge in the virus that we've been seeing in Europe over the last several weeks, if that's had any impact on business trends there, or just if you could comment broadly on if that's had an impact on the market in Europe.
So our business trends continue to be very strong coming out of our international business. There's a big watch out though because of COVID. We see cases spiking. It's concerning, right? Because if we were to have disruption, let's say, in our pilots, that would be a real problem. And we haven't seen that, but we're just watching this very, very closely.
Tom Wadewitz, UBS, please go ahead. Mr. Wadewitz, your line is open.
Stephen, you want to move to the next caller?
We will do. Our next question will come from the line of Scott Group of Wolfe Research. Please go ahead.
Hey, thanks. Morning. So you said revenue better than volume in the fourth quarter. Is that a sustained inflection or more of a one-off with the record surcharges? And then, Carol, you made I had a great line last quarter about the Bs and referring to billions of cost savings. Just directionally, should we be thinking a billion plus or potentially multiple billions of cost savings here? Thank you.
So, Scott, I'll take the first piece of this in terms of the pricing. If you look at the underlying health of the price and the quality of overall revenue, really it's more than just pricing. But as you look at the second quarter, you remember I peeled out fuel and SurePost to give you a good read at the growth, and we were 1.5% positive. That was the first time we saw a positive number there in quite some